Howdy, AJ here. Today we're looking at Qurate Retail. We're doing a one-off video. And first things first, whack difference in market cap and enterprise value. About $500 million market cap on 4.3 billion enterprise value. We see that revenue is up slightly from 10.2 billion to 12.1 billion over the last 10 years, but between 2018 and 2022, it's actually down about 15%. It looks like they engage in the video and online commerce industry in around the world. I'm surprised that their revenue went down from COVID. I feel like these types of things would have just bounced like crazy. Multi-streaming and social media. Okay. Founded in 1991, it's been around for a while, but I'm just surprised that its revenue has declined like this post-COVID. I would have expected a huge jump from everyone being at home. So that's interesting. Shares are down a huge amount. They've repurchased a lot of shares here. Net income kind of all over the place, as high as 2.4 billion and as low as negative 2.6 billion. But it looks like that was due to some other non-operating income. So it's likely a one-time charge there. Balance sheet, 1.2 billion cash on hand, but they have about 6.3 billion in total debt. So 6.3 billion total debt compared to their 5-year average free cash flow. I mean, rolling 12 and last year looked pretty bad, but I mean, before that, you're probably averaging 900 million. And the use of cash flow is really probably like 15% acquisitions, 15% debt pay down, and then the rest in stock repurchases. It looks like they have had some dividends over here, but currently don't pay a dividend. And yeah, I mean, the 5-year average of 900 million with long-term debt of 6 billion is still 7 times that. But what's also confusing is that 900 million is greater than their market cap. So that is an interesting figure. And it looks like it's due to them declining like crazy. I think people are worried about this debt here. I don't know when this is due. This 828 million, I don't know when that's due. This 5.5 billion, I don't know if that's 4 billion next year, 3 years from now. So you have to look at when that debt is due. I don't do more research until it looks like a screaming buy without anything. But if we look at just their last year's free cash flow or the rolling 12 free cash flow of 670 million, it's greater than market cap. So it's already something interesting here. I'm just gonna look up what their historical P and price free cash flow are, because I feel like that's something fishy. I don't know if that's due to their debt being so high. So sometimes they, if you look at instead of a price to earnings ratio based on market cap, you base it on enterprise value, it's probably closer to a 10 or so for a no growth business. But here we're averaging well under 5. So I'll say 4 for the P and price free cash flow. Again, these types of businesses just kind of confuse me why they sell for so little. But again, you have to realize that with their debt, people are taking that into consideration for the valuation. So although this is a 4 to the market cap, 5 times that, I mean, not exactly, but yeah, I think a lot of people are pretty worried about the debt situation, and in the last 3 years they've issued as much as they've paid down. I mean, here we're seeing big pay downs 4 years straight, and then they issue another 443. So the company, if they want to could pay down debt, not a terribly long time, but just kind of have to look when that's due and see if that's concerning for you. As for the other estimates, I mean, if they haven't jumped because of COVID, I feel like this is going to be a declining business. And then on the margin side, I'll probably do the lower end of the averages since the margins are declining. So let's do maybe 5, 7 share change, flat. I mean, yeah, it says it's a buy, but I don't really, yeah, I don't know if I'm going to do more research here. I would say that it could definitely be interesting. I would definitely just look when that debt is due. I think that's going to be the biggest hindrance. I think the stock has absolutely fallen far enough, but if everyone, if that debt is due soon and they don't have the cash for that, which again we saw that they do have 1.2 billion cash on hand and they only have 828 million due short term. That doesn't mean from years 1 to 3 they have about 3 billion. So I'm contemplating doing a deeper dive here. I might, but just don't expect it. If you want to research this company, please just look at when that. Again, I've said it a billion times. Please look when that debt is due. Otherwise, on a price to free cash flow basis, you're really also. I didn't say this. You're thinking that they get back to actually making money rather than losing it. So I might do a deeper dive here. I feel like don't expect it soon, but maybe in the next week or two, I'll try to do some more research here because it definitely looks extremely cheap and the price has fallen so much that, it could be interesting. So hopefully you enjoyed the video and have a great rest of your day. Thank you.